Sorry, we're just waiting for a cue to kick off. Welcome all.
You're
Nice
welcome
see
to
some familiar
start.
faces. Oh, good.
Yeah.
I shall do. Right. Good evening, everyone, and welcome to the last session of the day. I hope you're pouring a glass of red wine for yourselves. I thought of that earlier, but then I decided I might be slightly incoherent if I did that, so I haven't. So welcome to what in your program is called Challenges Relating to Implementation of the Carbon Tax. The speakers this evening are collectively the editors of a LexisNexis publication that is very imminent called Comprehensive Guide to the Carbon Tax. And three of us produced the thing called the Concise Guide to the Carbon Tax. What we are proposing is less a formal set of presentations and more of a conversation between each of us. We've spent a lot of time talking about these things to one another. And so I'm going to ask my colleagues to introduce themselves in this order: Mansoor, Olivia, and Geoff. And if we can go straight to Mansoor, please.
Thanks, Andrew. Welcome, everyone. My name is Mansoor Parker. I'm an executive in the tax department at ENS Africa, at the Johannesburg office of ENS Africa. I specialize in a variety of areas, including carbon tax and renewable energy. I began looking at the field of carbon tax together with Andrew and Olivia many, many years ago. And it took us a bit of time to get to the point where it's actually passed into law. And it's something whose, as we'll see from the discussions tonight, whose impact really seeps through the entire economy. And I'm really looking forward to the discussion this evening. Thank you.
Olivia, you're muted.
Sorry, I've been making that mistake all day, actually. Evening, everyone, and thanks for joining us. I'm Olivia Rumble. I work with Andrew Gilder at Climate Legal, where we specialize in climate change, carbon tax, carbon strategy, and now climate finance. And yes, I know Mansoor from my days at ENS, and I've been really enjoying a long association with Geoff over the last few years, and the pleasure of collaborating with him on this most recent book. And it's really intrigued me how I thought the carbon tax would be entirely dissimilar to environmental law. You know, it felt like a completely separate field when I read the bill, but I remain refreshingly surprised at the bog standard environmental law issues that are coming up under the carbon tax. So it very much remains a relevant field for environmental lawyers and not just tax practitioners. So I'm hoping you guys will gain something from that as well this evening.
Excellent.
Geoff.
Thank you. Geoff. You are muted, Geoff. Geoff.
Now I'm to blame for muting. Hi, I'm Geoff Stiles, everybody. I'm a partly retired consultant. Spent 23 years in South Africa working on a variety of energy efficiency, renewable energy, and later on, carbon financing projects. I bumped into Andrew a number of times during that period, and we worked together on a number of projects, in fact. And since then, since I've come back to Canada, we worked on a paper comparing the Canadian and South African experience with carbon tax and finance generally. So I got roped into this. I'm the fourth wheel in a three-wheel vehicle. And my job here is basically to provide sort of the global overview. That is, look at how carbon finance is being handled internationally, what different types of carbon finance there are, and how we might link that back to the South African system so that readers in South Africa, who will be the primary audience for the book, are able to see this in the global context. Thanks. I'm going mute again.
Good. Thank you very much. Ali, if you wouldn't mind putting up those slides now, I'd appreciate it. Good, thank you very much. So it's my task perhaps to set the scene just a little bit. Now, I'm not going to speak at length about the structure of the carbon tax because for two reasons. I'm hoping that by now, most of you will have at least looked at it peripherally, but also to spend time looking at the chapter and the verse of the carbon tax is deeply boring, and that's possibly why you might need a glass of red wine. So let me start by just tying together what each of us has already said. So last year, LexisNexis produced a book called The Concise Guide to the Carbon Tax, and it was in hard copy, and there indeed is a little picture of it with our names being myself, Olivia, and Mansoor as the editors of that book. It was deliberately truncated because it was trying to get out or get under the wire of the commencement of the first period for submission of carbon tax returns, so environmental levy returns, which happened in October last year and was delayed to October rather than July, which is the usual date for submission of returns. It was delayed last year because of COVID. So the idea was always that there needed to be a slightly more augmented version of that publication, and that indeed is now the comprehensive guide, which interestingly enough will be LexisNexis' first entirely online publication. So you will never be able to buy it in hard copy, which is quite sad, I think, because I'd love to sign it for myself. But it's going to be submitted as part of, well, it's going to be available as part of the LexisNexis online suite, and we hope for it to become available, part of it to become available quite soon. So we're doing this book in 3 parts. The first part is broadly introductory and looks at an international context, which is what Geoff is going to speak to a little bit later. The second part looks at how we got to where we are now in terms of the carbon tax. So Mansoor mentioned that there was a fairly lengthy period of gestation of the carbon tax legal regime. Indeed, it was 13 years. You can trace kind of the first real treatment of the carbon tax to the Environmental Fiscal Reform draft paper of April 2006, and we eventually got an act in 2019. By the way, Olivia and Mansoor, we've been working together nearly a decade, the 3 of us. So time flies.
Time for lunch to celebrate.
Yes,
yeah.
time flies when you're having fun with carbon tax. The third part, part 3 of the comprehensive guide, is the advice on practice, if you like. And we are going to try and be interesting by making comments from practice in this presentation. So, Ali, next slide, please. Now, the slides are not very interesting at all, but they are intended to demonstrate a couple of points. So first of all, the carbon tax, that last line at the bottom with the large red arrow, is one of a 6-component post-2020 mitigation system, which we think will become entirely operational by 2023. Most of the elements are in place. The most obvious elements that are still to be properly put into a compliance format is the carbon budget, and obviously a Climate Change Act. Now, Olivia and I were very fortunate to be the consultants to the then Geoff, or DEET, was it that far away? It was dear, sorry, so many incarnations. In drafting the climate change bill, which was gazetted in 2018. We are hoping that we'll have a Climate Change Act based substantially on that bill by the end of this year. And when I say based substantially, I was actually going through, just before this, I was doing a brief sort of visual comparative analysis of what the bill does and what the latest version of the bill does. Now, the latest version, certainly that we've seen, is an informal version that came out of the negotiations between government and NEDLAC and business in September 2020. That bill does a number of things that are of consequence for us today in both the carbon tax arena and in the broader climate change arena. Most pronouncedly, the establishment of the P4C, so the Presidential Climate Change Coordinating Committee, which is yet another mouthful like the REI 4P. And the thing we know that committee's been doing most specifically recently is advising government on the nationally determined contribution. All of this becomes deeply relevant as we move. We're in the last 6 weeks before we commence COP26 in Glasgow. Hopefully it will in fact go ahead this year. Of course, it was postponed last year because of COVID. If you would like to run your eyes down that left-hand column, those are the components of the post-2020 mitigation system, which is the terminology that DEFI is using. The carbon tax is one of those elements and was framed as an element of the mitigation system under policy documentation coming out of the Department of Environment, as far back as perhaps 2011, where we saw the white paper or the National Climate Change Response Policy. But of course, it is a regime that has been designed by National Treasury in a standalone act that is administered in terms of the Customs and Excise Act by SARS, which makes it quite complicated. I'll make one or two very passing remarks about budgets and tax, because that ties into the next slide. So we know that carbon budgets are still to be formally allocated under a compliance regime. There's been a process of a voluntary process around carbon budgets that's been in operation for some time. And if you are consultants or indeed lawyers, you perhaps will engage with that regime. Earlier on this year, the department published a gazette indicating that there's going to be a transitional period for carbon budgets, which will occur primarily most of next year, in order to dovetail the budgeting system. Sorry, the gazette doesn't say this, but this seems to be the implied functionality. In order to dovetail the budgeting system with the second phase of the carbon tax, which kicks off at the beginning of 2023. And there's a very interesting compliance and operational relationship between carbon budgets and carbon tax. So Ali, if you'll go to the next slide, please, and I shall explain that very briefly. So we were wondering for some time what would be the compliance mechanism for a carbon budget. And when we drafted the bill, the idea was that it would sit, the bill was not published in 2018 as a SEMA, as a Specific Environmental Management Act, but it's definitely going in that direction. It will be a Specific Environmental Management Act. But interestingly, there seems to be a carve out for compliance issues related to carbon budgets, because instead of carbon budgets being subject to the NEMA penalty, so the 5 years, 5 million rand, 10 years, 10 million rand, which is what the original idea was, this idea as expressed here seems to be where we're going, which is that the compliance mechanism for carbon budget will be a punitive level of carbon tax imposed on emissions over a budget. So there are a couple of consequences for that. Carbon budgets will be subject to carbon tax. So there's been some discussion, complaint even from industry saying, well, there's a double jeopardy issue going on here. You're effectively allocating us a carbon budget, but you're taxing us on the budget, and you're then applying a punitive level of taxation over and above the budget. And in fact, yes, I think that's where the regulator's going. The technical and intellectual, if you like, foundation of all of this is the reporting that is done under the greenhouse gas reporting regs as amended. So this is why we've got this Venn diagram here, which tries to illustrate that there's an interaction between each of these regimes. Last slide from me, please, Ali, which is also deeply unpleasant slide. So the kind of thing you hate when a lecturer puts up. I thought I'd put this slide up, which is actually taken from the original chapter 4 of the Concise Guide, because it illustrates some of the complexity, one aspect of the complexity of the carbon tax, which is carbon tax is imposed on Scope 1 greenhouse gas emissions as reported to the Department of Environment in terms of the amended greenhouse gas reporting regulations, but your actual carbon tax liability, so the effective rate of carbon tax, is eventually determined by way of a series of complicated, both internally and taken cumulatively, complicated set of calculations, broadly categorized under a set of deductions and under a set of allowances. I put this up simply to say that if one is advising on the carbon tax, or if one is indeed writing on and trying to analyze and understand and explain the regime, then it is all of these things that one needs to encounter and take account of. Olivia and I have spent quite a lot of time working in the carbon offsets allowance, so that bottom left-hand corner and that bottom, the bottom left-hand corner of this table, and that bottom row. And I'm aware that Olivia is going to make some remarks based on our own practice experience advising clients around the offsets allowance. What I'm very pleased to say, though, and Mansoor, you're up now. What I'm very pleased to say is Mansoor, though, is going to make comments based on advisory around implementation of the Act itself. Mansoor, I hope I've got that right, but please, over to you, Mansoor. Thank you. You are muted. There you go.
Thank you. Thank you very much, Andrew. What I will do is speak a little bit about some of the practical issues that emerged when the Carbon Tax Act was passed into law. Because with all the best goodwill in the world, there's no way for legislative drafters to anticipate all the types of issues that will arise when a draft bill is passed into law. There are specific mechanisms available for amendments to legislation to be made after it's been passed into law. It's colloquially referred to as an Annexure C process, where any technical corrections, Treasury invites submissions from affected taxpayers. And typically what happens is that these issues become apparent when the first round of tax returns has to be submitted. Because once somebody needs to sit and then translate the legislation into their operations and pull the detail into an tax return, and then gap starts emerging. Some of the issues that we picked up with the introduction of carbon tax, one related to the differing requirements for registration with DEF as data provider, and the licensing requirements with SARS. Because with on the DEF side, and sequentially, you first have to register as a data provider with the Department of Forestry, Fisheries and Environment, and then thereafter submit your carbon tax return to SARS. The tax base of your emissions on which you calculate your carbon tax will basically be your tax base that you previously submitted to DEF, or your greenhouse gas emissions. Now, DEF employs a wider definition of data provider, in that it can include a holding company which submits data on behalf of the group, in respect of which it is the holding company. Whereas SARS requires licensing to take place at individual taxpayer level. And in the initial stages, this created a bit of an issue because the greenhouse gas regulations were in place from 2017. The Carbon Tax Act came into place in 2019. Many companies had, for ease of administration, registered a single data provider, being the holding company, with DEF, and then found that when it came time to license the company for carbon tax purposes, they had to license the individual companies in their group where the operations were actually being carried on, rather than the holding company, which should largely be of a passive nature, holding shares in the operating companies. And when they attempted to license the operating companies, there'd be a requirement in the SARS licensing form, which is give us the data provider number for this particular entity. But the data provider registration number would be for a separate legal entity, i.e. the holding company. And there was quite a process of companies having to sort of undo the registration status with DEF in order to make it compliant with the licensing requirements with SARS. it's an issue which I think has worked through the system, but it's one of the areas, because of the overlap, that means that even though one starts with the data provider registration first, you've got to look at the subsequent steps that will follow and then see, is the data provider registration going to be consistent with the licensing applications that I'll make to SARS, so that you then don't get into the situation of having to rejig things after they've been after you've had them registered or licensed.
Mansoor, what was the practical advice given to clients? Did they have to go back and start the whole process again?
In some cases, the practical advice was to get the data provider registration done at the operating company level. And you often found this being driven by the finance team within the client organization, because the company that would pay the carbon tax would be the operating company, and you get the tax deduction for the carbon tax. So because the tax rules, you would want to match the income in the operating company with the expense, the carbon tax liability, so that the carbon tax liability could be set off against the income in that particular entity. If the carbon tax is paid by the holding company, it generally wouldn't have a tax base against which you can deduct the carbon tax payments, because the holding company would by and large hold shares in operating companies and receives tax exempt dividends. So it doesn't have something against which you can set off the carbon tax liability. Whereas in the operating company, they're providing goods, services, and they have taxable income against which the carbon tax can be claimed as a deduction. So for very practical purposes, from the SARS point of view, you'd want your licensing to be done at the operating company level, and then it sort of worked its way back to DEF, where the data provider registration then had to be consistent with the SARS licensing approach.
May I ask a question, actually? So one of the things that certainly you, Olivia, and I discussed and wrote and advised on for many years was the need for almost a changed reporting protocol or a changed culture within companies, because the carbon tax faces a tax liable entity with a scenario where the data upon which liability is based is captured by often the air quality team, but that is dealt with by the finance or the tax team. Are you finding that companies are bridging that kind of, I suppose, conversational divide?
Yes, sometimes after the fact. Sometimes an issue arises, a practical problem, which then causes this sort of collaboration to result. For instance, you might find a company employs an external consultancy to do a carbon footprint analysis or greenhouse gas emissions inventory analysis. And the company which they appoint does that analysis in terms of the greenhouse gas protocol, whereas carbon tax liability is determined under the IPCC guidelines. And although they're largely similar, there are differences. And you can see it coming through in the reports that gets provided, because the consultancies will provide the greenhouse gas emissions inventory reports to companies in terms of IPCC guidelines will state, either based on what we've seen or based on what management have told us, you are conducting activities 1, capital A, Roman numeral 2, small d, and it equals this particular type of activity. So from a carbon tax calculation point of view, it makes it much easier to take those findings and see where they fit in the table for carbon tax purposes, because the schedule in the Carbon Tax Act is virtually identical to the annexure in the greenhouse gas reporting regulations and the technical guidelines, whereas reports done under the greenhouse gas protocol wouldn't have that level of specificity with regard to those IPCC activities, which then meant a further round of adjustments that would need to be made in order to get it into a form to submit to DEF and to submit to SARS. So those sorts of things have played itself out, and it has required a closer collaboration between the sustainability team and the tax team and the finance team to make sure that everything is in a state that you can do a submission to SARS without having to make lots of manual adjustments, because that's normally where the errors do creep in.
Thank you. Proceed, please. I know you have some very interesting comments about the Customs and Excise Act, which is a beast.
It is. before I get into the Customs and Excise Act, there was another practical issue that emerged, and those were companies, we find especially retailers, where they get excess generators, and the standby generators, the capacity threshold requires them to license. But for carbon tax purposes, because the diesel that you bought, the carbon fuel levy is embedded in the price of the diesel, you are not then taxed for carbon tax purposes, because that would be a form of double taxation. You can't pay carbon tax on a fuel on which you already pay the carbon fuel levy. But for licensing purposes, it's something that emits greenhouse gas emissions. So it's included in the calculation and then excluded from the calculation for the purpose of determining your liability. And what you've had are many companies who are submitting null carbon tax returns. And many were saying, but we submit this data to DEF. Why do we have to do another return to SARS when we exclusively, when our emissions exclusively consist of petrol and diesel-based greenhouse gas emissions? And what I foresee, and possibly it's happened already, is some sort of analysis being undertaken and say, what would the cost be to SARS if this was simply removed from SARS reporting purposes? The data will be given to DEF, and you don't have to compel this particular group of taxpayers to go through the process of submitting these returns only to reflect a null carbon tax liability. So that was another practical issue that emerged. The last one arose when it's interesting. Somebody, I was asked, what's the penalty for submitting a carbon tax return late? The date has passed. There might have been an issue with some of the price tips that you need to do there if your carbon tax return is quite late. And I found the provisions to be quite opaque. Unlike under the Income Tax Act, there's a very well-defined penalty schedule under the Tax Administration Act, which says if you fail to submit your income tax return, then your penalty will be a random amount based on the amount of your taxable income. So you can calculate what the amount of the penalty will be. Under the Customs and Excise Act, not as clear. And we struggled a bit, and I spoke to other consultants who said in their experience they received correspondence where the penalties charged were X or Y. So I think there is an area, and SARS has issued an external policy document setting out offences and penalties, but I think there needs to be further layers of detail provided to affected companies. When you look at the Customs and Excise Act itself, the penalties seem quite scary. But when you look at the actual practice, what tends to be issued is quite reasonable. So I think there's a bit of a gap there that needs to be fixed in terms of administrative guidance from SARS Customs.
Good. Thank you very much. If I may also just make a comment in trying to understand how all of the document, because there's a lot of documentation that one has to be able to deal with, and perhaps the scariest documentation is the SARS rules in terms of the Customs and Excise Act, which now run to Olivia, stop laughing at me, which now run to 850 pages. Now, if you are advising someone on carbon tax, do not panic. Big blue friendly letters. It's not all 850 pages you need to come to terms with. What you need to be able to do is navigate the SARS rules. And I encourage you, if you've not bought, so it says he going into an advertorial, if you've not bought the concise guide, then I would encourage you to do it. But I would also encourage you to subscribe to the comprehensive guide, because particularly in the practical chapters, there is guidance on how to go through these processes, how to literally find your way from a schedule to a rule to a section in the Act. And much blood was shed trying to understand that. So I have developed a great level of respect for excise practitioners. Having said that, Olivia, please.
Actually, that's a nice segue, because you've mentioned a third practitioner that if you're working within the Carbon and Excise, the Carbon Tax Act, it's useful to know is not just a tax lawyer or tax practitioner, but also a Customs and Excise practitioner, because the two don't necessarily always align. And Customs and Excise is its own hairy beast, we soon discovered. And I guess the point I wanted to make was really that, firstly, the Carbon Tax Act has so many deep environmental law issues that we as general environmental lawyers are very well placed to interrogate, and they're familiar to us based on the NEMAs and the CEMAs and the EIA regs that we've dealt with, and particularly administrative law. And I'll touch on that in a little bit. And the other point I wanted to make in the next few minutes is that this must feel like another planet, right? After the previous discussion where we're talking about, what is the topic? Transformative constitutionalism since 1994. And here we are talking about the Customs and Excise Act and the SARS rules. But friends, I can tell you the Carbon Tax Act does have constitutional issues with it. And I will tell you about them in a minute. But with that nice lead up, why is the Carbon Tax Act interesting to environmental lawyers? Well, and it's actually quite useful that I have this, what has now become quite dramatic side lighting. It wasn't this dramatic before the sunset, but it's useful because there are a couple of issues, as Mansoor pointed out, where there's not necessarily alignment with licensing an entity and that entity reporting its greenhouse gases under the greenhouse gas reporting regulations. So as Mansoor mentioned, that might be the holding company that would have subsidiaries as well as satellite companies over which it has operational control. And there's been lots of conniptions about what operational control means. But then there comes a discord when you have reporting under the Carbon Tax Act, and the tax liable entity is, and this will be a trigger word for you, an entity that conducts an activity. And we know those words, right? Because those are the words we use under the EIA regs. And for me in practice, I always thought, well, the entity that conducts the activity is generally the face of the operations, right? It's Mattel, and it doesn't matter who Mattel appoints, this is just a fake example, who Mattel appoints as its energy service provider, or its a third-party contractor that establishes its waste storage facility, et cetera, ultimately Mattel is conducting the activity. And I haven't encountered too much resistance to that notion. Usually you get the environmental authorization that will have a special line in it that says contractors, agents, employees, service providers, et cetera, are deemed to be liability does not necessarily fall on them just because they're undertaking the activity on behalf of the holder of this authorization. But when you come into the Carbon Tax Act and you now have these two different entities, the one that is reporting under the greenhouse gas reporting regulations versus the one that conducts the activity, some confusion is starting to arise, at least between DEFI and SARS in relation to who should be reporting. And I'll give you a real life example. It's becoming a small cottage industry to go on site and provide energy to, let's say, a breakfast cereal company. So a very large coal-fired, well, a small coal-fired generator that's just over 10 megawatts. But that's, the asset is entirely owned by that third-party service provider. Their job is to just come in, generate electricity, feed it onto the breakfast cereal manufacturer. And the question in that situation arises is, does that change anything around who is actually conducting the activity? Right? You have issues around ownership of the assets. You have issues around, does the breakfast cereal provider have operational control, what that even means under the regulations? DEFI's view was that it's the third-party service provider. So this is quite a departure from what is normally the case. So that individual entity that's coming in, providing a service, and then potentially leaving at some point in time and giving the client the option to buy that asset. And we wrote a few opinions debating the issue. Ultimately, we landed that it was the breakfast cereal provider that was conducting the activity. But I use it as an example of how traditional environmental issues that we deal with under NEMA are equally relevant under this regime. And
Olivia,
why,
may I pick up a point there? There's a very interesting dimension to the example, and yes, that lighting is fantastic. There's a very interesting dimension to the example that you've just given, where very early on, we were encountered a scenario where a very kind of entrepreneurial provider of such energy services took on the responsibility for reporting greenhouse gas emissions for all of the entities for which it was providing those energy services across the country, and effectively had therefore communicated to DEF and to SARS that it was responsible for the carbon tax for all of those entities. Sorry, it's just an interesting point. So if you have only one cereal company, that's fine. If you're doing that for 15 cereal companies, then you might find yourself in a tricky situation. Sorry, that's a very interesting point.
Absolutely. And then the constitutional issue, which is, and it's been one that's still ongoing, so we can't really talk about it too much, is the lack of appeal regulations, or at least sort of traditional administrative law provisions that have been built into the offset regulations. So Andrew has previously alluded that you can reduce your carbon tax liability by using carbon offsets. If you want to use carbon offsets, you can't just present them to SARS. You have to ensure that they're compliant with these carbon offset regulations. And there's a whole procedure to bring them from the international market into the local market and then load them onto this online system called COAS. And that has been fine and well, but there's a lot of teething issues that are starting to emerge during the first year of implementation. One of them has been that after the fact, the DMRE, who's in charge of administering this, bringing in an onboarding process, made a mistake and allowed credits onto the system that should never have been there. And well, at least in DMRE's view, should not have been there. And the offsetter regulations don't deal with any situation for the DMRE to either change its mind or for an appeal. And there's a whole bunch of common law and case law around it, but the constitutional issue is around administrative justice, right? And legitimate expectations, fairness, right to appeal, right to a hearing, etc., etc. So Andrew and I are now kind of in the murky waters of PAJA and trying to figure out, how do you deal with a situation where there are no prescribed rules and the DMRE is making up its own rules for what's going to happen? And it's keeping us well occupied.
So the DMRE making up its own rules, a bit sort of flowing from the way its minister seems to deal with energy in this country. I'm about to hand over to Geoff, but I'd like to pick up a point that Olivia made and tie it back to a couple of things I said in the beginning. So we have this regime. We waited for a long time. We have an act that's been amended 3 times, I think, and it looks to be amended again. Those amendments have been both functional, so they've tidied up certain aspects of functionality, but also certainly in respect of the anticipated amendments that we should see occurring in January 2022 in terms of something called the Taxation Laws Amendment Bill 2021 is refinement around the use of sequestration. So it's been implicit within the act, it's been nascent, if you like, that sequestration can be a means to deal with a carbon tax liability. And we now see that there are amendments being introduced to, proposed amendments being introduced to the act itself that will push the regime towards a clearer understanding of how to deal with sequestration. The other aspect of the regime that's been recently amended, indeed this year, in March this year, with a carbon offset regulation. So the set of rules that kind of determine quite a lot of what Olivia and I do at the moment. We did for years predict that the implementation of a South African carbon tax with an offset component would give rise almost overnight to a healthy, bonny, young carbon market in the country, and it is very pleasing that that in fact is the case. What we do know is that year on year, so we've had a carbon tax return period for 2019. The submission was last year in 2020, and we've now had a carbon tax return period for 2020. The submission period was recently ended in July, and we've seen the carbon market grow year on year, literally double in size. And a lot of our work now, again pleasingly, is to go back into some of the stuff that goes back many years, which is looking at carbon contracting and how one deals with transactions for purchase and sale of carbon credits. Having said that, Geoff, you're really up. I'm going to hand over to Dr. Geoff Stiles, who is a mitigation specialist with whom I've worked for many years, and who saved our bacon by coming in as the fourth editor of the comprehensive guide. So Geoff, over to you.
Thanks, Andrew, and hello again, everyone. I'm just totally mesmerized with those accounts by my three colleagues. It's a very complicated system you have in South Africa. And I don't say that lightly. I think in some respects, that's a good thing. I wasn't going to talk much about Canada, but I think I'm constrained to, partly because I'm in Canada. I have no side lighting at all. It's all coming from above with very energy efficient LED light bulbs. But there are some striking similarities and differences. Canada's been doing taxes, carbon finance more generally for at least 15 years, but it still hasn't decided what it's doing exactly. And in comparison to South Africa, which had this very lengthy, prolonged consultation process, I was there when it started in the mid 2000s, and it went on and on and on and on. And eventually it produced a very complex set of laws and procedures, which is why lawyers are well employed now on that. But in Canada, we had the opposite effect. We started with local tax systems, carbon tax systems, and they evolved into different systems for each province. And you might recall that South Africa actually copied to some extent the Canadian Constitution in creating separate provincial authorities. We unfortunately didn't take that to heart. You were very clever by not giving those provincial authorities a lot of authority over these kinds of issues. In Canada, that's still a very crucial point of argument. How much power do provinces have to levy carbon taxes and other forms of carbon finance? It's a moot point. The Supreme Court just said a few months ago, the federal government does have the right to tax if it's taxing in order to meet international obligations, okay? But this is still not a happy situation, and each province is going its own way, and the federal tax system is created basically to fill the gaps for those provinces that don't produce a sufficiently robust form of carbon finance. So we have a real potpourri of programs. We have provinces that are wholly working on a cap and trade system, Quebec. We have provinces that have various forms of carbon taxation for different sectors. And overlaying it all, we have a federal system, which has a carbon tax, unlike yours, that is only applicable to fossil fuel suppliers. So basically, your liter of petrol is taxed at the point of distribution, and that's reflected at the point of use. And then on top of that, we have something which is similar to your system for industrial emitters. And that system has a very long name, the output-based pricing system, but it's not a tax. It's basically what we call a baseline and crediting system. So a level is set for each company, a baseline if you want, which they cannot exceed without penalty. And they can apply credits to this, much as in the South African case. And they can even trade, that's actually not the correct word, they can exchange credits with other entities if they come under their baseline. So that's much like a cap and trade system, but without the auctioning aspect of it, okay? So why am I saying this? Well, it's because we've had to deal with this incredible variation in provincial versus federal responsibilities that you haven't had to deal with. And then we've come through that with a real potpourri of programs. What's particularly interesting to me, now that I'm joining my South African colleagues in discussing this and writing the book, is how we deal with offset credits. And Olivia just talked about that at some length. The system we have in Canada is so far not well established. In fact, the regulations for offsets only came out a couple of months ago. So we're still finding our way. But like South Africa, we're trying to use different types of specific projects. For example, landfill methane recovery, certain types of forestation projects, certain types of agricultural projects. But it's a very limited set of projects. We don't have the ability to use existing carbon credit projects, CDM projects, or Vera projects, or whatever, to attract credits. That may come, and it's being discussed. But we're in early days of evolving this here. So we're looking at South Africa as a very experienced user of offset credits with a much more expansive and one that's tied to international protocols, which is particularly important to us. So I must say, I find this experience I've been having with my colleagues really eye-opening. It's we should be learning from you. It's not going the other way. And I want to say too, in that respect, that I'm hello. Did I just lose something here?
No, we can hear you. We've lost you. Oh, there you go. No. There you go.
Yeah, that's interesting. My iPad is telling me that I have limited battery life left.
Okay, but you're still here with us now. So go.
Yes, thanks.
Proceed.
Okay, so in short, my summary of what I'm going to say here is that we've sort of structured the first few chapters of the comprehensive guide around the idea of comparative discussion of different types of tax and carbon finance systems. We start by talking about non-tax systems in a very broad global context, how they developed in different countries. And then we start to talk about, at the end of it, about trade, cap and trade systems, and also systems like Canada's, which is not really cap and trade as such. And so we try to reach in each one of these chapters some comparative points for South Africans so they can see, why did South Africa choose this particular type of system? Is it more effective? What design considerations have to be made in developing such a system? South Africa followed it? Have other countries followed these considerations? So by the end of those chapters, you should have a pretty good idea of where South Africa sits in the global context and why, in some respects, I think you are amongst the most exciting political program going anywhere, because you've really looked at this in incredible depth. And you have people skilled to talk about this at the legal level, which so far in Canada is not the case. And you don't find that surprising, but it's true.
Geoff,
So,
if I may pick up from there, I was absolutely fascinated by the discussions that we've had with an international colleague who's an Uber tax expert, and has written has actually written tax regimes for various developing countries, and to understand just how different a tax specialist, and no, hang on, let's be clear. Sorry, I misspoke. Not a tax, but he's an economist, and it is a different glimpse of things. It's a different take on how these things should be designed, as opposed to how they actually are designed and are implemented. Sorry, I interrupted you. My apologies. But Geoff, back to you.
No, you didn't interrupt me at all. I was coming to an end because I'm not in a position to comment extensively on the South African system.
No, sure.
But I did want to make sure you understood that in some respects, there are interesting parallels, which, by the way, Andrew and I discussed in a previous paper we wrote for CCLR. There are interesting similarities and some extraordinary dissimilarities. And I think in retrospect, South Africa was very wise to put a good bit of power in the federal system rather than in the provincial system, because that makes it a lot easier to design this kind of taxation or financing regime. Without that, Canada is constantly compromising and trying to adjust things to the reality that different provinces want to tax different types of energy, different types of emission with different instruments. And it's a real mess.
Good. Thanks for that, Geoff. No, great. I mean, we're gonna go to questions now, but there's a question. All of the questions are focused on South Africa, but actually, I'm going to throw one to you, the similar one to you, colleagues. The paper that Geoff mentioned as having been published in the CCLR is the Carbon and Climate Law Review, 2019 edition 4, which was an edition that Olivia and our special guest edited on African climate legislation. Now, this is meant to be a conversation, so let's continue with the conversation and with dealing with some of the questions. So those of you who are attending, if you want to go off camera and show us yourselves, I mean, we know you, Sue. I think I recently met your brother around a braai last Saturday, and so you know, that's kind of an interesting kind of indication to just how small this community can be. If you want to go off on camera and talk to us and ask questions as they come up, please do. If not, we're going to just go through the questions that we've received. Panelists, have you received the list of questions from, so excellent. Ali's asking a question. Peter's asked Geoff a question. Thank you very much. Have you received the whole list of questions from Ali? Excellent. So can I do this? I'm going to deal with a question from Melandri. Mansoor, can you deal with the question from Peter Cantor? So Peter's question, is there any connection between carbon tax, carbon offsets, and income or expenditure from carbon trading? I can also contribute to that. I will do Melandri's one. Olivia, would you do you think carbon budget, COP26 will have an impact on carbon budgets? Geoff, there's this question, and I'm going to extemporize a little bit in the Canadian context. So there's more than one question. There's 3 questions for Geoff. There's 2 questions for Geoff. Geoff, the first question for you when we get to you is COP26 going to have an impact on Canada's mitigation ambition? So that's how I'm interpreting that first question. And Geoff, there's a second question for you from Peter Cantor, which is, what impact has carbon tax had on economic growth? And that's a good question. Geoff's going to have some fun with that one. I'll
do the one from Barry.
From Barry. Okay, good. Great. Excellent. So Melandri, the question is, how effective is the implementation of carbon budget and carbon tax on curbing greenhouse gas emissions to the extent of meeting both national and international commitments, and are there additional instruments? So thank you. That's actually there's quite a lot to unpack there. All right, because if we just go to the end of your question, which is, well, you're mentioning national and international commitments. So we've been a little, notwithstanding the fact that South Africa likes to crow just how much of a leader we are in the advanced developing world community in terms of our climate change ambition. In fact, we've not been particularly ambitious from a mitigation perspective. That is why you've seen the P4C recently advising that the mitigation component of the nationally determined contribution should be significantly tightened. The mitigation component of the NDC and indeed how that will be made visible in the first iteration of the Climate Change Act is the mitigation expression of ambition called the peak, plateau, and decline that comes to us from 2011 out of the National Climate Change Response Policy. So the question is, well, did we have to do anything? It kind of almost, as the Climate Change Act hit, we were probably going to comply with that international commitment anyway, unless we tightened it up. Indications are we are going to tighten it up. But now let me go back to the first part of your question, which is, how effective is carbon budget and carbon tax? So there's 2 responses to that broadly. So remember that the carbon budget and the carbon tax, while I suppose being the primary compelling instruments, and I don't want to use compliance because there's compliance in other way. So the most apparent command and control based instruments. There are other aspects of that post mitigation, that post 2020 mitigation system that are relevant. So there's a national trajectory, which Olivia, I hope, will refer to, please, when you talk to the COP26 question. And there are sectoral emissions targets, literally targets that will be imposed on sectors within government, and we can expect those responsible government departments and sectors to impose further, perhaps overlapping or side by side targets on players within the sector. So that's the first broad response. The second broad response is, as the carbon tax is now, no, it's not going to change behavior, but it was never intended to change behavior at this level. Environmental affairs was at pains, Treasury was at pains throughout the entire process of establishing the carbon tax legal regime, was at pains to emphasize that the regime, the rate of carbon tax would be implemented at a very light burden, at a very low level of effective rate of carbon tax initially, so that carbon tax liable entities could become au fait with the system, and when it became sharper and more burdensome, they were ready to go with dealing with it. And I have two quick responses to that. Firstly, a lot of organizations completely ignored it and said, it's never going to touch us. We don't believe it's ever going to happen. And so we don't care. Now, that was incredibly short-sighted, because there was opportunity lost to grapple with what was clearly going to be a new environmental tax in the country. And so in the first period for submission of carbon tax, there were a number of organizations that simply did not submit their carbon tax returns. And I can only surmise that was either because they were just being contrarian, which is not a good idea when you're dealing with SARS, or they had not prepared themselves sufficiently well. And here's the second comment, is that while the effective rate of tax at this point is still low, we know how it's going to increase. It says it in Section 14 of the Carbon Tax Act. So it's 120 Rand in 2019, increasing by CPI +2 annually until the end of 2022, and then CPI onwards. So for this year, carbon tax is 127 Rand a ton. For sorry, my apologies, for 2020, it was 127 Rand a ton. For 2021, it is 134 Rand a ton. And for next year, it is 145 Rand a ton. So it's increasing exponentially as we move. It will become a much sharper instrument as we go on, and it is then that we will see some of the effects. Mansoor, will you perhaps deal with that Peter Cantor's question? So is there any connection between carbon tax, carbon offsets, and income or expenditure for carbon trading? I'm happy to throw in some comments if you would like. So Mansoor, over to you, please.
Sure. We have the two different taxing regimes being impacted by this question. The one is the income tax regime, and the other one is the carbon tax regime. So on the carbon tax side, we know that carbon tax and the rates that Andrew mentioned is the tax rate multiplied by 1 ton of carbon dioxide equivalent emissions. And the carbon offsets will be measured on the same basis, 1 ton of carbon dioxide equivalent emission that's been saved. And so for the carbon tax perspective, that is where the set off occurs. You set off each ton against the ton on which you would have paid tax, and then ultimately you'll be paying less carbon tax the more offsets that you purchase. Now on the carbon tax side, the tax base is not measured in rands, it's measured in CO2 equivalent emissions. On the corporate income tax side, your tax base is measured in rands. So a company would pay rands to acquire those carbon offsets, and it would pay that amount to a carbon offset generator. And the generator of the offset would be generating those offsets. And for that generator, the offsets would be pretty much like trading stock, almost in the sense of baked beans and oil kernels in a retail store. They're generating something for the purpose of sale to carbon tax liable entities. And when the carbon tax liable entity purchases these carbon offsets, it creates very interesting questions from the corporate income tax perspective, as well as the VAT perspective, because it's likely that the purchase of those offsets will attract 15% VAT. So you have two questions. Number one, can I deduct, can I get an input tax deduction for the 15% VAT, which are paid on acquiring those carbon offsets? And having bought the carbon offsets, can I claim an income tax deduction for the amount which are paid on the acquisition of those carbon offsets? Now, both require some analysis taking into account the nature of the entities involved, and that's a separate analysis from the carbon tax analysis. The carbon tax analysis will be, I've got to pay tax on each ton of carbon dioxide equivalent emissions. When I buy the offsets acts as a bit of a tax-free shield. I reduce my taxable emissions by the amount of the offsets, and I pay tax on the balance. The corporate income tax question will be, can I claim a tax deduction for the expenses which I incurred in reducing my carbon tax liability? How is that related to the income which my company produces? Because that's the key question for corporate tax deductibility. Have I incurred this expense in the production of income? And there is some debate that if you incur an expense for the purpose of reducing an expense, so you're buying the offset in order to reduce a carbon tax liability, indirectly it increases your income, because the lower your expense, the bigger surplus there'll be for income. And the analysis will be focused on that part, on the corporate tax deductibility part. It's a very interesting question, but it does lead to lots of analysis.
May I pick up from there as well? Very, very strictly speaking, what's happening in South Africa is not carbon trading. Geoff mentioned a cap and trade system in Canada. So that is literally a legislated system in terms of which entities that are subject to an emissions cap are permitted by that legislation to, well, they are first allocated offsets, and they are permitted to the extent that they need to trade those offsets with one another. We're not doing that in South Africa, but let me immediately say it feels like we are doing that in South Africa. Strictly speaking, what's happened in South Africa is that by the creation, by the introduction of the carbon offset allowance component of the carbon tax, what has been created is an environment, a landscape in which typically over-the-counter transactions for the purchase and sale of carbon offsets are occurring. This is really important though. So Peter, so thank you for bringing it up, because certainly the last official position from Environmental Affairs around carbon budgets is that the department will not countenance the use of emissions trading, so carbon trading, if you like, in the context of carbon budgets. So there have been a number of propositions around allowing entities that have been allocated carbon budgets, and by carbon budgets you can kind of assume they are a cap on emissions. So entities to which carbon budgets have been allocated being permitted to trade or exchange those allocations between them in order to stay below those caps. Now, it's worth saying that under a previous mitigation regime, if you like, or a mitigation department within Environmental Affairs, there was absolutely no countenance of that. We don't know where that's going to go. They might reopen that question. I don't know. I do know that industry was very interested in the idea of having the flexibility of being able to trade their allocated carbon budgets while still being able to use offsets for their carbon tax. that would add yet another layer of complexity to the regime, which would make it more interesting. Olivia, I'm going to ask you, please, to deal with the question of, do you think COP26 will have impact on carbon budgets? Would you please immediately, though, not go to Barry's question? Would you pass it to Geoff? And Geoff, will you, once Olivia's passed it to you, there are two questions for you, please. Will COP26 have any impact on Canada's mitigation ambition? And then the question, has carbon tax had an impact on growth in Canada? But first, Olivia, please, your response.
Yeah, sure. It's a great question. No one's really sure what's going to happen at COP this year. And it's what's nice about your question is that it's got two elements to it. So you've asked whether you think the COP will have an impact on carbon budgets. And there's two types of carbon budgets. There's the carbon budgets that we're all talking about in South Africa, which is this promised compliance instrument that DEFI wants to implement and have allocated to individual companies. But then we're also talking about the global carbon budget at the COP. So that is this scientific notion of the total volume of greenhouse gases that the world can realistically absorb in either a 1.5 or a 2 degree future. Today, people are mostly speaking about a carbon budget for a 1.5 degree future. In relation to that issue, I don't think we're going to achieve much at the COP. We just had the G7 have quite a heated debate on whether 1.5 degrees should be a target for at least the G7 countries. Ultimately, they agreed that they would pursue for a 1.5 degree future, but developing countries at the G7 were pushing back. The meeting of ministers for the G20 have pushed back on agreement on just a 1.5 degree future. So we'll see what happens at the G20, but it doesn't look good. So in terms of us having global agreement on a better carbon budget for a 1.5 degree future, I'm skeptical for COP26, but that's what's lovely about working with Andrew is that I'm usually the skeptical one. Andrew's usually the glass half full one. So I think it's a mixed bag. The lighting is getting increasingly dramatic too, I can see. But in relation to South Africa's carbon budgets, I don't know, we've kind of always just done whatever we do regardless of the international space. So everyone did an NDC that looked in a particular way. Our NDC looks completely different to everyone else's from a mitigation target point of view. We've been humming and hawing about carbon budgets for years. We've put it in our NDC. We'll probably go through with it regardless of what happens internationally. Definitely wouldn't back down when Treasury introduced the carbon tax as a compliance instrument and insisted that we pursue carbon budgets. So I doubt that COP26 will get us to revisit them at all. I've heard that we will revisit our draft NDC commitment, so the one that was published recently, but these are just rumors at this stage. So our NDC commitment is what's going to be informing the carbon budgets at the end of the day. So I doubt that anything that happens in November is really going to materially affect what we achieve at home. But who knows, maybe next year or the year after, we might ramp up our ambition even more. Geoff,
Yes.
Speech stick is yours.
Yes. You are muted. Geoff, you are muted.
Still muted.
Go.
Go.
Back again. I'm answering the question on COP26. Is that what you wanted?
Yes.
Yeah.
So
Yeah.
will COP26 have any impact on Canada's mitigation ambition?
Well, I don't know if COP26 will, but the need to show greater ambition in anticipation of COP26 and ongoing negotiations, it certainly has. But what it's done, Olivia just mentioned the NDCs, the nationally determined contribution document. Canada submitted a new one a few months ago. It does increase ambition for overall emissions reductions from, I believe it was 30% by 2030 to 40 to 45% by 2030. And in most people's opinion, both of those goals are totally unlikely to be reached. We just don't have the policy mechanisms in place to do that, pure and simple. However, what it does is it engenders a significant debate on this, and that's important. And we just happen to be having a federal election at exactly that time.
Absolutely.
So each party has then given a new target. Some say 45%, some say 50, some say 60. They're numbers. They don't really amount to anything in terms of concrete policy direction. So we're in the midst of this debate. And at the moment, most people don't take the government's plans very seriously, because every independent organization that has looked at them, such as Climate Action Tracker, has said they're just not sufficient, I think is the word they use. Sorry to put that negative tone on it, but that's what it is. There was another question, I think.
Yes. Has carbon tax had an impact on economic growth in Canada?
Well, I can't speak for Canada because it's still such a new phenomenon at a federal level that we don't really have a detailed analysis of that. But at the provincial level, remember that each province has gone its own way for many years. And British Columbia was one of the first jurisdictions in the world to have a carbon tax. They've had it for over 10 years. And they did an analysis a couple of years ago, which showed quite clearly that it had had a positive, not negative effect. That is, it hadn't reduced economic growth at all. It had actually, if anything, increased growth in some sectors as a stimulus, okay? So the small scale answer to that question is, yeah, it's not had a negative impact on GDP growth at all. But we don't have a national answer to that question yet. And hopefully in the next 2 or 3 years, we will.
Peter, I love your point about I expected more from Canada. I mean, I think I also quite often expect more, and Geoff correct on a number of instances, not necessarily related to this. May I just pick up a thread that Geoff has just made about economic growth? I mean, there is a very interesting tax imposed in Mauritius called the Sustainable Development Tax, which is a tax imposed on diesel and coal imports into the country, and those revenues have literally, they've achieved something we in South Africa have not been able to do, which is they've ring-fenced those revenues and they've applied them to really important sustainable issues in the country. For example, the replacement of outdoor incandescent lights with LEDs in a number of areas around the country. And if you look at the structure of that tax, it's a carbon tax. It just happens to be in that instance a tax on, particularly on fossil fuels. So you want a single infographic for all of the carbon tax legal issues? No problem, no problem. Mansoor will prepare that for us using ENS resources. But I do definitely agree that it would be excellent to have a separate IAIA South Africa chapter look at this, and what would that be? Would that be a half-an-hour session? Hell no. I mean, it would be, you know, we presented days or multiple days worth of training. Olivia, Barry's question, please.
Barry, great question. So Barry's question was, would the external services provider giving energy to the breakfast cereal company not be required to report their emissions based on the extended producer responsibility requirement? And that's an interesting take on EPR. I only am familiar with EPR in the context of the Waste Act and how it would require generators of waste as defined, if you can make sense of that definition, to assume responsibility for that waste from cradle to grave. I think we might, I mean, you could argue that there's also a cradle to grave responsibility in energy services provision, but it might be hard to kind of shoehorn that into the greenhouse gas reporting regulations as they currently stand, because they're still very much centered and framed around who is conducting the activity. But yeah, so forgive me if maybe I'm being a bit naive around the legal requirements of EPR, but I think you would only really find those housed under the Waste Act. But maybe smarter lawyers at this late hour at 10 to 8 on a Thursday could help me out. Maybe there's another way of looking at EPR.
I don't think EPR would impact on where carbon tax liability falls, though. So I mean, you would, and I'm making this up as I go along, as any good lawyer does. Yes, of course I know the answer. Let me consider this. So I mean, I think EPR is a different regime, and I think what we are seeing, and this is one of the issues that you as an advisor are unfortunately faced with, is that there are overlapping regimes that apply to the same, in this instance, emissions. So just take, if you go back to that Venn diagram that I had early on, you've got 3 overlapping regimes. You've got carbon budgets, which are going to be allocated in terms of a set of new regulations that we've not seen yet, under a climate change legal regime. Those same emissions are subject to the reporting requirements of the amended greenhouse gas reporting regulations, which are currently made in terms of the National Environmental Management Air Quality Act, but will be migrated to the regime under the Climate Change Act. Those emissions are also at least partly subject to the pollution prevention plan regulations, which will be renamed as the mitigation plan regulations and will be migrated from NEMAQA to the Climate Change Act. And they are also subject to carbon tax. And may I say to you,
there's a lot of overlap between the regimes. I don't think we're going to see overlap with the Waste Act just yet, but who knows?
Sure, and may I say, I had a very interesting conversation some time ago with one of the architects of the carbon tax legal regime sitting in Treasury, and I drew that Venn diagram because I will not name the individual person concerned, because I was bleating on about how complicated the carbon tax is, and the response was, it's not complicated. I mean, it's very simple. It's really quite clear in the act. And I said, yes, but have you considered the interaction of this regime with the other regimes? And the response was, what other regimes? And so I went, well, carbon budgets and reporting, and I said, well, here's how they interact with one another. And honestly, one of the architects of the carbon tax legal regime was unaware of how this overlap is occurring and how difficult that makes it sometimes for carbon tax liable entities. Of course we do, Sue. We definitely want to talk to the IAIA. Sorry, I'm extemporizing. Now, colleagues, Olivia, you said we wouldn't get this far. We are 10 to 8. I'm
deeply impressed. And someone's just joined us, I think.
I know. John, hi. I'm going to make some. Peter, how's it? Good to see you. Look at you. Are you in a cold place?
Cape Town.
I'm in Bots.
Sorry.
Oh, hi. Sorry. Good. I'm KZN. I migrated back to the coast because it's warm and it's freezing out there. I've had a beanie on the whole day, so I thought that it doesn't fit.
I think it's Chardonnay time.
It's definitely
Chardonnay
time.
and fire time.
So, colleagues, we're going to make final remarks. Please think about your final remarks. I will lead and perhaps tie a couple of things. I'm going to pick up a point that Melandri's made about the climate action tracker. You know, Melandri, it's very interesting you mention that, because quite a lot of fingers have been waved at various governments, including at the South African government, because of what Climate Action Tracker has said about the NDCs. So when we saw published in draft the proposed amended or updated NDC, there was a chorus of complaints that draft updated NDC did nothing more than the peak, plateau, and decline. And a lot of that criticism and commentary was based on the fact that at that point, South Africa was, I think, highly insufficient. We may have moved to insufficient, or South Africa was reflected as insufficient in the climate action tracker. So it's very interesting that international visibility is used by domestic commentators to, in a sense, try and hold government to account. And I think that's very good. I want to make a comment about the Climate Change Act. and then a comment about a couple of other things that we hope to see at COP26, and I'll be brief. First thing is, one of the unique features, or nearly unique features, of the South African climate change bill, and hopefully the act, is that it deals equally with mitigation and adaptation. And Olivia and I have spent quite a lot of time, thankfully. Climate Legal, by the way, if you want to work for Climate Legal, you have to have dramatic lighting, as you can see Olivia does. Otherwise, don't submit your CV. We've been very lucky enough to advise various governments around the world on climate legislation, or at least components of climate legislation. And one of those pieces of work for Thailand required us to do an international best practice analysis. And from that, it became very clear that most legislation that is called climate legislation around the world is focused primarily on mitigation, whereas the South African regime is at least equally dealing with mitigation and adaptation, and that's got to do with what environmental affairs want. That, so the kudos to the department. A strong adaptation subdirectorate saying, claiming its own space within the regime. Last comments from me before I hand over to Mansoor, then Olivia and Geoff again. At the COP, we're going to hopefully see a final coalescence of what they're calling the Paris rulebook. We've not, the reason we haven't seen that, the final clarification to this point, is because the outstanding order of business has been Article 6. I'm not going to talk about Article 6, but among other things, it has been regarded as the future foundation of an international carbon market, among other things. I would like to make a point, though, that we're going to see further refinement of what is called under the Paris Agreement, the transparency framework. The transparency framework is important for NDCs because a nationally determined contribution is exactly what it says, nationally determined, and we are not obliged. No country in the world is obliged to achieve the objectives and the targets set under a nationally determined contribution. What we are obliged to do is report under the international transparency framework on how we are going about seeking to comply with our obligations under the NDC. That is relevant because all of the reporting matrices that we've spoken about here, so reporting under the carbon tax, reporting under carbon budgets, reporting under the greenhouse gas emissions, the greenhouse gas reporting regulations. All of those ultimately need to speak to how South Africa reports under the transparency framework. So it's very important for what we do nationally, how that evolves internationally. And the last thought from me, and I will pick up a point that Geoff made, which is in some instances, South Africa is a leader in these areas. There's another area that South Africa is a leader, is that we are moving towards the recognition of domestic carbon standards. So not offset projects, not projects done under a national South African carbon standard. No, domestic standards developed by private sector entities in the country. And that's a very interesting further step. And again, I must give kudos to Treasury for this, because Treasury wanted to find a way of bringing carbon finance down to the grassroots level. And that's one way of doing it. Enough from me, other than ultimately to sign off. Mansoor, your last thoughts, please.
Thanks, Andrew, and thank you very much for your facilitation and moderation of tonight's sessions, and to everyone for the
I am never moderate.
for the questions, Geoff and Olivia. I've enjoyed the evening very much. I'll conclude by saying that the Carbon Tax Act is a dynamic piece of legislation. It's not cast in stone. It's not static. It's been amended several times already since 2019. And oftentimes we find those amendments are driven not by tax people, but by those who are involved in operations who come up against an obstacle that requires an amendment. So when you come across situations that seem strange, don't think the door is closed, that if something doesn't quite work, there are avenues to ensure that the act is adaptable and that it does adapt to the way business is being done. And we can see this coming through in the renewable energy side, with more companies being able to generate their own renewable energy and going up to 100 megawatts. There are provisions in the Carbon Tax Act that allows credits to be claimed by companies for renewable energy which they purchase and to set it off against their carbon tax liability. So a lot of these incentive provisions are in place to encourage certain types of behavior. So I think it's something that given that I find from the environmental side, you're closer to the companies and what they are doing, it's very important to bear in mind the types of actions that the Carbon Tax Act rewards through deductions and allowances, because companies would benefit from that. And they're meant to benefit from it. And that's why it's in the Carbon Tax Act.
Thank you, Olivia.
Thank you.
Yeah, thanks, Mansoor. And I think you raised an important point that it's such a dynamic act. I said to Mansoor the other day, but it's a loophole, and what are we going to do about it? And it doesn't make any sense. And he said, well, they'll just change it at the end of each year, which is how it works in like an environmental law. You know, I think, what are we, 3 years on? NEMLA still like before Parliament. Whereas with tax, it's an incredibly dynamic field. And so we're probably going to have to update this book on a yearly basis. But I guess the encouragement is that, and I'm saying this to you, Sue, who put up I think it was a dead smiley face about a few minutes ago, because I think we may have broken you with information, but I'm laughing with you because I feel the same as you sometimes. Like, it's incredibly complex. But the purpose of this book is to actually simplify it without tooting our own horns too much. So you can buy the concise guide, which is shorter but now out of date, or you can buy the comprehensive guide. And it really is intended to simplify things. And if you've bought the book, you can always drop us a line and we're happy to clarify a point.
And I recommend the IAIA buy all of the remaining copies of the concise guide, and we'll sign them for you.
We can't sign them for greenhouse gas reasons, so we decided to do the online print version for carbon reasons. Thanks. Over to you, Geoff.
Geoff, go ahead, please. As our senior partner, you are muted. Geoff, you're muted. There you go. Cool.
There. The reason I'm muted is because I'm surrounded by barking dogs, and I didn't think you wanted to hear that. They've gone now. So I'm going to just throw something totally different out, because I'm not an expert in the South African law or South African climate policy. Something that's been happening recently that's of great interest to me is that countries like Canada, there are a few others, Norway would be another example, who are large exporters of fossil fuels. So in a sense, they're fueling the problem, and pardon the pun, and have a large historical contribution, which has been discussed for other countries as well. There's now a notion being batted around it, it may come up at COP26, called fair share. And the fair share concept basically asks the question, but so far without providing a solution, shouldn't these countries be taking on a much larger burden of reductions in emissions than in fact they do with their sort of simplistic 30%, 40%, 50% by 2030 thing? And the Climate Action Tracker is actually, who we talked about, is actually doing some research on this, as are several other people. And I'm very interested in this concept because I live in a country where the government refuses to deal with fossil fuel production and export. It subsidizes fossil fuels to an enormous extent, one of the largest subsidizers of fossil fuels anywhere in the world. And yet they want to achieve a meager 40% emissions reduction by 2030. Is that fair? I think not. And I think it'd be interesting if any of you have ideas about this, or have contacts or knowledge of sources on this, I'd love to hear from you. That fair share issue is going to be really big in the next 2 or 3 years, I think. Thanks very much for listening.
Good. Thank you very much. If anybody wants to make contact with us, and now Geoff has invited somebody to make contact, please perhaps do it. Go onto Climate Legal's website and send contacts through us, and we'll pass it on to Geoff. Other than that, we are done. And except to say that I'm very disappointed with myself, because I made the comment earlier that Geoff had saved our bacon, and I missed the opportunity to say that he had saved our Canadian bacon. So I will leave it at that. Thank you very much. It's been a great session, and we will sign off. Thank you very much.
Thanks, everyone.
Thanks.
Well done, team.
Bye.
Thank you.
Thank
so
you.
much.
Thank you.